All right, so let me just get straight what I want to share with you tonight. Okay, so I have promised to share with you guys on some criterias I used to take some of my trades, recent trades like that. So this firstly, I already told us this from the first any other videos I sent to you, personally, my own personal videos. Now, the first thing you do when it comes to the market is to know the direction the market is going. Then you trade with the market. You trade with the trend because the trend is always different. Even though there are opportunities where you can take counter trend trades that the trader that cannot that does not follow the trade. Sorry, that does not follow the trend. So basically, this is one of the trades I took. There are several that ones too, but then this the particular one, this is US that I promised to share with us. So when I just came newly to the market, I've been off for the market for months now. So the first thing I did was I came to check on the market. So the first thing I go to the higher time frame to know what direction is the market. So that was how I found out that the market is in an uptrend now changing to a downtrend. There's a change of character. So let me wait for it to load. Okay. Oh, am I gone? Okay, yeah, this is this is this is this is. So the market is in an uptrend. You can see this. I did this before. This is an uptrend. This is an higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low. So if you are in this market now, the first what you'll be looking for is what is a is an upward move is to buy in the market. So then I was looking for a buying opportunity, but then I found out that there is a change of character here. So look at this, a higher low, then is a higher high, a higher low, then there is a lower high, which is showing us and telling us that the market is about to change to the downtrend. Then from this lower high, it gave us another lower low. This is the previous low here. This is the previous low here, and this low is lower than this. Then it gives us a lower low rather. Then I was actually waiting to take my trade from this place and sell. Even though it sells, but it did not respect my entry, so I did not enter this trade at all. I did not enter this particular trade at all. Let me delete itself so you don't confuse. This second trade too, I did not enter. So after it broke this, I was just waiting to see if it will come back to this place and sell also give us another retracement here and then sell. But unfortunately it did not give any sign of retracing, so I did not take this trade. Let me delete it. So I didn't take this trade. But then I noticed something, and this is what I wanted to show you exactly because I've shown you several things before. My main strategy, I've shown them to you before. But this is what I wanted to show you. So this here gave us a kind of double bottom itself, or should we call it even inverse head and shoulder? Yeah, we can call it this inverse head and shoulder pattern. So if you've learned about patterns very well, you know this. So this is part of the videos that has been sent to you, which you must have known by now. So then this a pattern trends on what I'm not even looking at pattern because I don't trade pattern. I focus on my SMC, which is smart money concept. Even though patterns are just one of the things you use as an extra confluence for your trade, okay? So this is why all these basic things you need to understand them. So you use them as confluence when you're trading any other strategies. So this is just it. I found out there's a breakout happening here. A breakout happening here. This is it. Let me take you to the 1 hour time frame. Ah, okay, this is it. This is it. This is it. Where is it again? This is it. Yeah, that is it. Yeah. There was a breakout happening here. So this is like the previous pattern that was forming. Then let me show you what I'm trying to tell you. Now this thing is currently in an uptrend. It's currently in a downtrend. Let me show you. Currently in a downtrend. But then there was a break out here. You know what we call a breakout? The breakout is when a strong point, a strong point in the market is being broken. And this is here. This is a strong point. These two lines I drew here. This two line I put here is representing a strong point in the market. So market keeps evolving around it, keeps evolving, and moving around it, moving around there. After it broke out, it is giving us a confirmation that the market is about to buy. So I was looking for after it broke out here, if I had entered the trade here, it would have been great. But then I did not have any confluence, I did not have any setup for that. So it's not part of my strategy. So some people might have it as a strategy and they may take it. But it's not part of my strategy. But what thing I waited for is here. After it broke out of here, when I took my Fibonacci retracement, the Fib retracement, which I've taught you guys before, I came to this point and then I took it here. This is a secret that a lot of people don't know. A lot of people don't know, and it is just the simplest thing that makes the market easy to milk. It means the simplest that makes the market easy to milk. So I took my Fibonacci retracements. Where is this one going to? Okay, this is it. Where's the line I drew? So this is it. Yeah, I took my fib reading from the last point here. I hope you all know how to set your fib. You're going to set it from this last point in the market to the highest point in the market. If you want to use it to take a trade. But you don't just use it to take you use it to take a trade, you wait for a retracement back to that point after you've confirmed that the market is in an uptrend. And how do you know that the market is in an uptrend? When there is a breakout or if it is a continuation of trend. Now this in this case it's a kind of breakout. That means a breakout out of a strong level in the market. Because basically the market is actually in a downtrend before. If you look at it very well, the market is in a downtrend. This is a kind of lower low, a lower high. If I say this is a lower high, let me show you. Let me should draw it for you so you get it very well. So this is a lower high, a lower low. Then something happened here. This strong place. If you look at it, market came back here, then came back here again. So this is the last point here, right? This is the last point here. But the market has broken this part. I mean, it's giving us a higher. What is that? A higher high. This is the previous high here. So this market has shown us a higher high here. And what are we looking for? Waiting for? We're waiting for a higher low. See, this market is very simple. You understand these higher lows, understand the basic structures. It's given we're waiting for a higher low. Then from that higher low, we will be expecting another higher high like this. Simple. Let me stop this drawing of thing. It's just as simple as that. I hope you get what I'm trying to show you. I'm sorry I could not. I'm not that feeling very distant. I could not. talk much, but at least I believe you can hear me. So this this is what we're waiting for. The market was has gone down. Look at it again. Let me show you again. I wanted to get this view exactly. Now the market was actually in an uptrend before. It went in an uptrend, then it gave a downtrend from this point. From this point here, it gave a downtrend. When it gave us a lower high, lower low, lower high, lower low. Then this is where it changed character here again. Change character to give us a lower, we can list a lower high rather. Then give us a what? A lower low. Give us okay, yeah, it gave us a higher low here. Now this is even where it started. It gave us a higher low. If that it wanted to continue a downtrend, it's supposed to come down here and break this. If it came down here and broke this, then we'll be waiting for a lower high. Then we'll take for it, then we'll go for a lower low. But this time around, it gave us a instead of it to give us a lower low to this side, it did not. It gave us a lower high, a higher low rather. And then from the higher low, this gave us another higher high. Let me zoom it out for you to see. This is a lower low here. This a higher low rather, and it gave us a higher high, higher than this one. Then after that, what are you waiting for? You're waiting for a low, a higher low rather, higher low, and then you take your higher high. Simple, very simple. Then but when you see this now, let's say you're in a market like this, whereby you see that there is a higher high here, and then let's say you've seen that the market has broken now, that's giving you a high. How would you know the point of entry, which is the most important part? That will determine how you can either win or lose in a trade. So how do you determine your point of entry? Now this is where the Fibonacci retracement comes in. Now let me just give you the terms. It's a simple psychological background behind this. Come in and plug my PC. It's a few minutes. Oh god. Yeah. So the psychology behind this Fibonacci retracement is simply, let's say you're in the market, you are a buyer. Let's take for instance you are a buyer. So anything you want to buy or sell in the market, you must always think about this. Let's say you're a buyer in the market. I wanted to buy something. You wanted to buy this market now. You are currently at this point and you want to buy the market from this point. Are you going to buy? Will you be interested now? There's what we call premium and discount. You must have heard about it very well. So anytime you want to buy in the market, you must always ensure that you buy at the discount point. Now, how do you differentiate between the no? So if you want to buy, you buy at the discount point. If you want to sell, you sell at the premium point. Now, how do you know the discount point and the premium points? So anything, if you use set your fee, let me show you the settings for my fee. I think I've showed you guys before too. So if you go to your fee is part of the tools on your trading view. Okay. So when you go to your fee, you're gonna see all this line are ticked. But you just choose only the 0.713, 0.618, 0.5 and 1. Those are the four you need. For me, some people have more than that. Some people have only two, but what I have tested and seen work is this four. When you have this four on your tools, then you take it from the lowest point in the market to the highest point for you to know where you need to buy or sell. Now this time around we are buying and we are taking it here from the lowest point to the highest point, and I will be waiting for the market to come back to the premium to the discount point. And now when we now talk about the discount point start from this green side. This green line starts from there. So if the market has not entered this green line at all, don't even bother to buy. Sometimes market can just buy without reaching that green side. It happens, yes, it happens, but then it's in rare cases. But then it's better for you to follow your plan. That's why when it comes to trading, you have to be mechanical. You have to have a plan, have a strategy to continue trading consistently. So you have a plan, right? So okay, after you set your fee, and then I have told you strategy, my strategy, what I've tested that has worked several times is this 0.718. That's the point that works all the time for me. The 0.7, let me click. So what you are using 0.786. Let me take it to 15-minute time frame. You can see, you can see something. What's happening? 15-minute time frame. This is the trade I'm currently on. It's going my direction. Even though I came in late to it, I came in late to it. Yeah, I've been very busy. So what is this trade self? What is what I'm showing you? I just hope this thing is recording. I should not be stressing my good self since yeah, this is what I want to show you. So I took my fee at this point. From this point, this is where I took my fee. I took my fee from this point to this point. Let me show you again. Now this is I took my fee from the lowest point to the highest point here, and then it showed me then this is my point of entry. I will not enter until the market gets to this point. Now come and look at the point I'm talking about. So you can see by yourself, this point is 0.786. Market got there and did well. I can show you several of my trades. The market always come back. So this 0.786. So come back here, touch it, and then start flying. So after I got here and I found out okay, the market is about to go up, what did I do next? I wait for it to come back to my discount point. Now some people used to choose this 7, like if the market should get to this point, to this 0.618, they will take that trade. And sometimes it works. So but just that the market will come down, will play their emotions a little. To play their emotions a little, there's a way market plays with your emotion. So if you take the trade, took the trade from this place to play with the emotions, although some people, in as much they are already familiar with it, so they won't be shaking. So, but for me, I take my trade, and there's some trade, some currencies like gold. Gold is crazy. Most time, gold we always take from this 0.61. So it also differs on the kind of currency you're trading or the metals or instruments you're trading, right? But then for BTC USD, it works most. BTC USD, GJ, EJ, those three. I don't think I can still show you all that tonight, but let me just show you this. At least I try. I seriously, I start explaining myself to most people, but that's not the plan. So then, so this is the point where I take my entry, and then what happened after then? I cut over 2,000 pips, 2,000 and 2,165 pips. This 1.6, this 1 ratio 6.98 almost 1 ratio 7, almost 1 ratio 7. I mean, I use $1 to make $7. Yeah, as simple as that. So just as simple as I showed you, what you can continually implement on the market and make money and get good cash out from the market. This is a strategy session. So I think I was able to share with us so emotional sessions and then psychological sessions. But then just for the main time that I'm kind of off, I'd like you also be here with me. and understand. So I'll be back fully very, very soon, just for me to clear some things that I'm currently on. So with this, I'm very sure that someone will get something that could help. Then I could help fast track. I could help give you more info on how to trade um in the markets. And if you have questions, please always do it to ask me. You can see this same strategy was what I was using to trade here. Look at the trade now, it's going in my direction, and possibly it might be a bad reverse here. But I know this is a strong point, and I think based on my strategy, this a point a fair value gap here. So this is what you should know. I'm not supposed to be telling you what a fair value gap is. This is a fair value gap here. It came to retest. And I think with this, we are good to go. I'm leaving this trade overnight. You know, the time is currently 12:22. I'm leaving this trade overnight. Either it wins or not, I'll come back to see my result tomorrow morning. So good night for now. Thank you. Alright. If you have any questions, do well to ask in the group. Do well to ask in the group.